Alright, let's break down the concept of a credit score in layman's terms and understand why it holds such importance in our financial lives. Imagine you're in a race where the finish line represents your financial goals, like buying a car, owning a home, or starting a business. Your credit score acts like a scorecard in this race, indicating how well you're managing your finances. It's a 3-digit number that summarizes your creditworthiness to lenders. Your credit score is based on your credit history, which includes things like loans, credit cards, and bill payments. It tells lenders how likely you are to repay borrowed money. The higher your score, the more trustworthy you appear to lenders, and the better terms you may get on loans. Components of a credit score. Your credit score is calculated using several factors. Payment history. Do you pay your bills on time? Credit utilization. How much of your available credit are you using? Length of credit history. How long have you been using credit? Types of credit. Do you have a mix of credit types, like credit cards and loans? New credit. Have you recently applied for new credit accounts? Now, why is your credit score so important? Loan approval. Lenders use your credit score to decide whether to approve your loan applications. A higher score increases your chances of approval. Interest rates. Your credit score also influences the interest rates you'll be offered. A higher score typically means lower interest rates, saving you money in the long run. Access to credit. Good credit opens doors to various financial opportunities, such as credit cards, mortgages, and personal loans. Insurance premiums. Some insurance companies use credit scores to determine your premiums. A higher score may result in lower insurance costs. Employment opportunities. In some industries, employers may check your credit score as part of the hiring process, especially for positions involving financial responsibilities. In conclusion, your credit score is like a financial fingerprint, unique to you and impacting many aspects of your financial life. By understanding what it is, how it's calculated, and why it matters, you can take control of your finances and work towards achieving your financial goals. Remember, maintaining a good credit score requires responsible financial habits, like paying bills on time, keeping credit card balances low, and monitoring your credit report regularly. Here are 10 practical tips based on understanding credit scores that you can apply to everyday decision-making. Pay bills on time. Make timely bill payments a top priority. Your payment history is a crucial factor in determining your credit score. Set up reminders or automatic payments to ensure you never miss a due date. Keep credit card balances low. Aim to keep your credit card balances well below your credit limits. High credit utilization can negatively impact your credit score. Try to pay off your balances in full each month or keep them as low as possible. Limit credit applications. Be cautious when applying for new credit accounts. Each credit inquiry can temporarily ding your credit score. Apply for new credit only when necessary and avoid opening multiple accounts within a short period. Monitor your credit report. Regularly review your credit report to check for errors, inaccuracies, or suspicious activity. You're entitled to one free credit report from each of the 3 major credit bureaus annually. Take advantage of this and stay vigilant. Diversify your credit types. Having a mix of credit types, such as credit cards, installment loans, and a mortgage, can positively impact your credit score. However, only take on additional credit if you need it and can manage it responsibly. Avoid closing old accounts. Length of credit history matters. Closing old credit accounts can shorten your average account age and potentially lower your credit score. Keep your oldest accounts open, even if you're not actively using them. Communicate with lenders. If you're facing financial difficulties and struggling to make payments, communicate with your lenders proactively. Many lenders offer hardship programs or may be willing to work out a repayment plan with you. Limit credit card applications. Be cautious when applying for new credit cards. Each application triggers a hard inquiry on your credit report, which can temporarily lower your credit score. Stay informed. Stay informed about changes in your credit score and factors that influence it. Monitor your credit report regularly and sign up for credit monitoring services to stay updated on any suspicious activity. Educate yourself. Take the time to educate yourself about credit scores and personal finance. Understanding how credit scores work empowers you to make informed financial decisions and take control of your financial future. By incorporating these tips into your everyday decision-making, you can build and maintain a healthy credit score while making sound financial choices.